If you don't feel comfortable with the first buyer, you don't have to sell it to that person.
Nobody wants to just take it over and work 80 hours a week.
Why is that selling out? That's like you're being rewarded.
Welcome to the Tax Mastery for Solopreneurs show. Today we're going to be talking about how to successfully scale and sell your business. And we have a very special guest with us, our first guest on the podcast, Vince Perri. Welcome. Glad to
Thank
have
you
you.
for having me.
Yeah, of course. I'm joined by my co-host today, Daniel Sleep, our CEO and founder and CPA certified tax strategist, and Camilo Rojas, our senior tax advisor at Oakenshield Tax Advisors. We're going to be diving into a lot of great things today, specifically as it pertains to growing your business and looking for opportunities to sell it as well. Let's introduce our guest, Vince. We'd love to get to know you a little bit more. If you could give us a quick introduction about who you are and what you do, welcome.
I've been an entrepreneur for over 16 years. I've scaled about 4 different businesses, sold one myself. Over the past year, I've developed a passion for mergers and acquisitions. And initially, my intent was become a business broker, help business owners sell their business, market their business, and ultimately broker the deal. But what I'm really more passionate about is the individual behind the actual business. Just the first deal that I actually brokered, it starts with a conversation to find out how the business is, just so that we could figure out sort of how to market it and to see if it's ready. It was about a year ago, and the conversation was on fire just because I speak the language of the business owner. I know the struggles, I know the successes, I know everything they're going through. And I realized that what I'm really passionate about is the exit advising part of it. Typically, I look for business owners either over 3 years in business or 0 to 5 years away from exit. So either like front end or back end. But the idea is to develop a relationship with the business owner, find out their struggles based on evaluation and based on some scores and criteria that we put together, but then just get to know more about the business owner to see how ready he or she is, he or she's family is, he or she's leadership team and management team is ready, and then ultimately how ready is the actual business as a whole.
Right. That's amazing. I love that you have a passion for it, really kind of lit that fire like you're talking about. So today, our audience is mainly solopreneurs and solo business owners. We're going to be talking through that lens, but also for business owners in any situation as well. The first thing I wanted to kind of jump into is, when you first start with a client and you're scaling with the end in mind, what are the most important things that they should focus on to make their business attractive to buyers down the road?
Yeah, scaling with the end in mind is kind of a concept that hit me about a year ago when I got into this. And it's something that I wish I would have implemented throughout my entrepreneurial journey is scaling with the end in mind. And now that I'm scaling this company, everything we're doing is with the end in mind. The number one thing to understand about scaling with the end in mind is making your business as transferable as possible. You have to treat your business as its own product. So if you have read E-Myth Revisited, every business owner should read that book. It talks about treating your business as the actual product. That product has to sort of be its own entity in a way that it can be ultimately sold and transferable to somebody else. Now, what does that mean? Everything within that business or within that product are the tangible things like the systems and processes and checklists, the employees that work in the business, the customers of the business, and all of the marketing materials, website and stuff like that. All those things are packaged in its own thing, and it has to be sort of its own entity so that it could ultimately be transferred to somebody else. That's bare bones of it. If I could just try to explain it, I'm curious to see if you guys want to jump in and tell me what you think as well. But that's basically treating the business as its own little product itself, its own physical thing that you could ultimately build in a way that you could pass it on to somebody else.
Yeah. We were talking about this, right? The books idea.
Yeah, Vince, I watched a couple of your videos and I really found it refreshing how you honed in on you got to make sure your books are really clean.
Mm-hmm.
As tax professionals, accountants, we're always focused on the books because those streamline in the tax return and it streamlines into the info we use to create tax projections and strategies and calculate savings. And a lot of business owners don't really get books. They look at it like it's kind of boring, but we always hone in on that. It's like these books have to be really clean, really straightforward, or you can not only is it an issue with maybe them getting chosen for an audit, but also probably the valuation. And I'm curious, did you have personal experiences where you're like maybe a client or yourself where you're like, oh my gosh, these books are not conveying the right message. And maybe the business owner was just missing why this is so critical. I'm curious what your experience has been.
Yeah, my experience is the same as any other solopreneur in the beginning. I don't understand anybody that uses a spreadsheet to put their books together and does everything manually. As soon as I found QuickBooks Online, even if you're doing it yourself, it categorizes everything for you. It has all these alerts on, hey, what does this mean? What is that? So, I mean, in the beginning, if you want to give it a shot yourself, you got to use the QuickBooks Online because it does a lot of the work for you. For me, the next level for that and making sure your books are clean is some kind of bookkeeper. That was a game changer. I've had my bookkeeper now for, Anna has been with me for like 4 or 5 years from the Philippines, by the way. I don't necessarily encourage this or condone it. It just worked out for me. She's an accounting major. She was an instructor at a local university in the Philippines. She's super nerdy. She knows her stuff, and she's just been with me for a long time, and it's been a real game changer. As far as the accounting side is concerned, which is kind of funny when it comes to exiting your business. I talk to a lot of accountants, and I get it. For me, I want an accountant that's going to help me save in taxes and make sure I don't have to pay the government so much money. What can we do to save on taxes? What can I spend money on? How will this work? Let's show the least amount of profit as possible. When we're preparing a business for exit, it's actually quite opposite, which is why it's very important for you guys and I to have a good relationship so that we just have an understanding. It's like, all right, look, the last 3 years they're going to be looking at. And I know that we've been saving on taxes and they're going to be adding back. The less add backs that we have when valuating a business, the better it is because it's a lot cleaner that way. And then obviously the more profit, the more cash flow that we show a potential buyer, the more that they're ultimately going to get. And I don't know if you've ran any of these reports, but I was told by this at a local little conference, exit advising conference that I was at recently, where the amount of money that you save on taxes compared to the amount of money that you could potentially sell the business for and the multiple, one outweighs the other, is what I heard. There's like a figure, but I forgot what it was. But apparently, like, people are afraid that they want to make sure they're saving on taxes. They don't want to show too much profit, and it doesn't really make much of a difference if you're able to sell for that nice multiple and more profit.
I think it's
Yeah.
a
Go
timing
ahead.
difference. In your first or second year, you want to be thinking about exit planning, but you can't get to the exit if your business fails. In those early years, taxes can really hurt. 10 years into the business, you need to start thinking about it totally different. But those first few years when you're struggling with cash flow, that's where I do think that saving on taxes is probably number one priority for most people without forgetting about your exit planning. Once you're getting closer to the end, yeah, I think you do need to be establishing a history of high profits if your idea is to sell. Now, question for you, when you're doing these, is are the books more important than the tax return itself, or are they
Both.
equal?
Both, because there's different figures and different add backs that I get from the tax return as opposed to what I get. What's one example is the
Depreciation. Yeah.
depreciation is a big one, right? Yeah, where I don't really get a clear understanding of that in the books. Typically, what I ask for last 3 years income statement, last 3 years cash balance statement, and last 3 years tax returns. They all give me different figures that I could put into the add backs when valuating a business.
For specific ad backs, like let's just say we have someone that has depreciation, but let's say they also did 401k, profit sharing, and a defined benefit pension plan, and it equates to maybe 350,000 more in deductions. Is that pretty straightforward to add back to the valuation?
Yeah, pretty straightforward. Anything that goes, any obviously discretionary expenses, but anything that is related to the direct owner, that specific owner of the business, typically gets added back.
Okay,
So
awesome.
I think pretty early on, one of the things that you mentioned was packaging the entire business together. And I was curious about that. So we can use, Oak and Shield as an example here. There's 100 different tax checklists out there, right? There's 100 different ways you can do your process, your onboarding, your everything. From a selling perspective, is it more advantageous to take one of those cookie cutter programs, or is it more advantageous to develop your own in-house systems and processes that you can then sell?
There's so many ways that what are a million ways to skin a cat. Are we talking about systems and processes and checklists? That's what we're talking about.
Mhm.
I mean, for example, like my team, we use Google Drive and Google Docs for all of our systems and processes. And we have a Google Sheet, like an Excel spreadsheet, that houses all of the systems and processes according to the department with the link to the Google Doc of the systems and processes. I've heard Notion is phenomenal for having all your SOPs and stuff like that. However, if you do it, make sure that it gets implemented with us every quarter. It's a requirement. Go take a look at the SOPs again, update it. However, update it throughout the quarter, but every quarter I'm going to look at them and I want to make sure that they're all updated to the way that they're supposed to be. Any way that you do it, just do it. Document it. It's got to be documented. The hardest part is making sure that your employees use it. But if you're a solopreneur and you're the only person there, when I launch this, I'll give you a perfect example. We do a 7-figure exit map, which is a value clarity report, which is the valuation, personal readiness score, financial readiness score, business readiness score, business attractiveness score. It's a killer report that we send for people who want to purchase this product. I did it myself in the beginning. And when I was creating these reports, I was on loom.com, screen sharing, recording myself, taking the transcript and putting it, thankfully we got AI now, but putting it into ChatGPT, creating the SOP. And then as I did more reports, I kept updating it. Now I have my admin that does the bulk of it and has the report and the system to go by. For solopreneurs, do your best to document however it is that you do the thing that you do, whether administratively or even out on the field. Just document it. My car wash comes over my house once a month. Great guy. I'm trying to help him. Every time I see him, we just talk. Honestly, the quality of his car wash, I can't explain to you. The guy's like 60 something years old and he still does everything himself. And his attention to detail, like it's just insane how beautiful he cleans and washes my car. And I'm like, what's different about what you do? And I always start here. I always start with the outside. I do a walk around and then I make sure that I see all the things that I have to do. And I always start with the wheels and then I start with this. And then I said, you have to put that on paper because then you could hire somebody who could actually do it all for you. But then we get into the conversations like, those are my secrets and I don't want to give up. There's no secrets. I'm trying to help them however I can, but everyone's got a process. Even when you walk into your office, you turn on your light, you turn on your computer, you go into your email, you do this. It's got to be a repeatable thing.
That process down, right? The documentation is key. Do you find that there is any sort of issues when people use something like when you have something like Google Docs, that's very easy to integrate. If somebody has a business and they're acquiring another business, that's very easy to integrate. But what about when they have proprietary software and it doesn't just integrate? Do you see that causing issues when selling a business?
Are you talking about a CRM?
Mm-hmm.
Yeah, CRMs are fantastic. They're great, but there should be a process on how to use the CRM as well, But having a CRM, I think, is phenomenal. We have one. We use Go High Level ourselves, and there's just a way that it all flows, that it has to be used. Having a CRM is very beneficial to the selling of a business. It does have an effect on the multiple because it shows that everything is organized and all of your clients and customers are in one place and the history of them, which leads to the recurring revenue portion, how you charge, and AR is always a big issue. You have to have it all in one place. So yeah, I guess we were talking about two separate things, but yes, having some kind of system in place, like an actual software that does everything, it's one of the first questions I get asked from a buyer. Is there software?
This is great. I feel like we're already going into our second point here, which is preparing for the exit. So it sounds like documenting those processes, having a clear step-by-step for everything, right? And then also that clear CRM for yourself to make everything as smooth as possible. But when a solopreneur is starting to think about selling, what steps should they be taking to get their business deal ready?
So there's the tangible and the intangible. You guys touched on the tangible, which is the books. I think you should always have clear books. Everything should be clean. You should have an idea of what your overall income expenses are. Everything should be labeled and organized. Having clean books is very important. In regards to the clean books, having profit and showing cash flow is also very important. What a solopreneur who is starting out could really focus on are the intangibles. If you've seen my YouTube show, I talk about the intangible capitals. The first and foremost is your structural capital, which is in your CRM and your SOPs and having everything documented. Start that early, start that now as soon as you can, save them somewhere, put it on a spreadsheet, make sure that that's organized. Then your customer capital is very important as well. You want to have a diverse group of customers because that's a question that they're going to ask. Customer diversity is a big one, and you want to be less than 20% reliant on one particular customer. Social capital is, I talked about on my YouTube channel, We had one business that was super, super owner dependent. I mean, he was doing everything in the business to the point where I sat down with him and I'm just like, why are you selling the company? You're so profitable. It's such a great business. Just hire an operator. And he was like, no, I've tried that before and I'm too much of a control freak. So I'd rather just sell it. But the guy had over 1,000 five-star Google reviews.
Wow.
And it just increased it. He ended up selling it for more than we had valuated because of that. Customer capital, social capital, structural capital, and then your human capital, which is making sure all the employees are aware of the sell. That's a big one. You have to be open with your employees and let them know your plans on selling it and making sure that they're all on the same page. And even then, if you could also, depending on the size of your company, provide some kind of post-exit plan for your employees to make sure they either share in some of the profits or have some kind of benefit plan for them post-exit, that's super beneficial as well. I don't know if I answered your question.
Yeah, no, I feel like those 4 different areas that you brought up are key. That's awesome. And even that last point about making sure everyone's on the same page, that the employees understand that the sale is happening. That's great. Do you guys have any follow-up questions about that?
Yeah, I thought you hit it on the head, Vince. I think solopreneurs tend to be an operator unless they're really leveraging technology, vendors, and other strategic partners that aren't necessarily employees. I was going to ask if somebody comes to you and they're a solopreneur, is that one of the first concerns is like, okay, you can't sell your glorified job that is a business, even though you own it. Nobody wants to just take it over and work 80 hours a week. Do you sometimes find yourself having to coach them through getting it where they have processes in place to remove them so that it's easier to sell? Is that a hard thing for a lot of solopreneurs?
So there's a step-by-step process that I've learned over the years. It's called the hiring ladder, is what I call it. And it all starts with you have to do everything yourself. On the ladder, there's about 5 rungs. You have to do everything yourself in the beginning. Once you've reached your capacity and you're just overwhelmed, you're stressed, we've all been there. I've got too much work. And I hate it when people say, well, you should be lucky. You should be grateful. It's like, no, this is very stressful and I need to do something about it. The first person you need to hire is an executive assistant or an administrative assistant. Whether it's overseas or local, depending on the type of business you have, hire somebody that can handle all the administrative tasks and also your email and your calendar. Once you hire your administrative person, you don't have to handle the administrative stuff. The second rung on the ladder is the delivery. So the delivery of your service, the delivery of your product. If you could find somebody who could handle cutting the grass so you're not cutting every single person's lawn, and the electrical, hiring a tech to go out there and handle some of that stuff, producing products that you need. That's the next person. Now you're no longer in the administrative role, doing all the admin stuff. You're no longer in the delivery role. Sometimes those two can be combined in the beginning, but eventually you'd want to separate that. The next rung in the ladder is the marketing ladder. So you're out there networking and you've built your social media page. Now you want to hire somebody to make sure that you're posting on social media consistently, make sure that you have a decent website that people can go to, make sure the information is in your social media profiles and it looks okay so that you're handling all of the sales that come in. Once you start generating leads through marketing where there's a decent amount of lead flow coming in, then you hire the salespeople. I always say people because I believe you should hire 2 at a time so that they're competing against each other. You don't want to hire salespeople until you actually have consistent lead flow because they're there for sales. They want to make some money. Delivery, marketing, sales, and then the last rung is ultimately leadership. As you start to grow these roles, you can start putting people in leadership positions. That gets you out of working in all of these rungs of the ladder. But it takes time. It doesn't happen overnight. It takes several years to do that. Obviously, those are people you're paying. You have to be at a certain amount of revenue and cash flow to afford these people. That's what I always explain to a business owner. They usually have a marketing person and a salesperson, but they don't have an administrative person, or they have an administrative but no marketing and they handle all the marketing. So sometimes they're a little bit out of whack, but I like to use that ladder to sort of like, okay, you've got this person, now we need to hire this person because you don't have that person yet. And let's get you slowly out of the business by hiring the right people.
You said something I was curious about is when someone comes to you, is there ever a revenue minimum where you're like, hey, you need to be hitting this minimum as well as minimum profitability to really attract the right kind of people? And then with that, are private equity also like, hey, if they're not at least 10 million or more in revenue, they're not interested? So how do you tell someone if they're the right fit versus they need to work on growing the business more?
I do like a 15, 20% net profit. That's a pretty nice range to be in. If you're at a 15 to 20% net profit, you're doing pretty good with that and holding control of your expenses. In regards to private equity, typically over 5 million or over 10 million is what they're looking for. Anything under that, you're looking at probably an individual buyer or a roll-up. Roll-ups are pretty popular right now, especially we just sold a pest control company that, oh my goodness, every other pest control company in the area was salivating for it. We ended up selling that for a lot more than we thought it should have sold for, but it depends on the market, right? With some of these businesses that sell, I mean, it's like anything else. The demand ultimately drives the price, and that's what happened with that one. But as far as private equity, yeah, they're looking for typically anywhere between the $5 or over $10 million range. And as far as net profit, the 20% net profit is definitely what we're looking for. But in regards to overall gross revenue or just overall revenue, it really depends, man. Like there's a buyer out there for everybody. I've been very surprised over the last year or so. Anything that you throw out there, I mean, it's the M&A market is a pretty hot market right now. Everybody wants to buy a business. You have all these influencers, Cody Sanchez and stuff like that, really promoting M&A and buying a business. Don't invest into real estate, invest into business. So it's a funny thing, and that's why I'm pretty excited to really be all in on the industry right now.
Right. And let me ask you this, because I have experienced this personally where a few financial advisors also become exit strategy specialists. From my experience, it seems like they only become an exit strategist to help liquidate and sell this large business asset and then have those assets, like the cash from that sale, be the assets under management. So it's kind of like a win-win for them. For you, are you purely focused on consulting on exit strategy? Have you seen that yourself, financial advisors and planners that are exit strategists, but do you see yourself as different from maybe those that have kind of that dual certification?
Yeah, totally. I like those guys though. I'm a certified exit planning advisor, and we encourage that we have a team. I have several guys on the team that are all independent. I need to make sure that I have an accountant, a financial advisor on my team. I need to make sure that I have an estate planning attorney on my team. A business coach even on my team is really good. And if all those people are also exit planning advisors, that makes it even better. It makes it a much smoother process because they speak the language. To answer your question, I'm solely focusing on the actual business readiness, making sure that the business is ready, attractive, and we're implementing all of the intangible capitals so that we could sell for the highest multiple possible. Then I'm going to bring the accountant in to make sure that the books are clean and everything looks great, along with the bookkeeper. I'm going to bring the financial advisor in that's also a certified exit planning advisor because he speaks the language to make sure that his personal and financials are ready. Bring you guys in for the tax hit they're not expecting upon selling this business. If they're also exit planning advisors, it's not something I look at as competition. It's more like, let's work together since we all speak the same language. Approximately 80% of this person's net worth is in this business. Let's make sure we do this right. We set this up right. So I'll focus on making sure we get maximum exit. I'll broker the deal, but you focus on making sure he doesn't get a big tax hit. All the books look clean and everything's ready to go. All the due diligence is done by the time we even put it to market. And then the financial advisor, you make sure that all their personal and the financials are ready. Estate planning attorney, come on, I need you in here as well to make sure all the wills and trusts and everything's lined up and everything's good to go as well. Business coach, hey, I'm going to make sure that we're implementing 90-day sprints. That's pretty much what I do, but I need you to come in. You know what I'm doing, and you're also an exit planning advisor to make sure that you're meeting with this person on a weekly basis. You're meeting with the leadership team. You're meeting with the family as well. If we're selling to the family, it just makes for unity, making sure that we're all working together. It's
Okay, somebody that also has that kind of dual certification, you see it as it's going to empower them as a strategic partner that I can work with rather than somebody that is doing this to get to step two, which is maybe closing on a different type of service. If you
Yeah, but that could be. I don't know if that's what their MO is. If that's what they want to do, then that's okay too, I guess.
But at the end of the day, it doesn't bother you. It's like, hey, they speak the language. we can all work together on this.
Yeah, it's much better. I have my personal financial advisor, a guy I went to high school with. He's been my financial advisor for over 10 years. I told him, get your certification, man, so that when I refer you, we all speak the same language. In my interview, I do a total of 3 hours. I do about an hour and a half, 2 separate weeks, and we deep dive on the personal and the financial side. All I do is just ask questions. I find out what's going on, and then I've got a criteria. I give them a score. And if that score ends up being low, it's not up to me to ultimately now provide the financial advice and where to invest your money and so on. It's just like, okay, you need help. I need you to speak to this person. Part of my questionnaire is, do you have an accountant? Do you have a financial advisor? If the answers are no, then you need to speak to these people because you need them as part of your team.
Awesome. Go for it.
So, Vince, this has been awesome. Thank you. I feel like solopreneurs and business owners now have some really solid strategies in mind for, okay, this is what I need to prepare. This is how I can properly prepare to scale and sell my business. So now I just want to talk about life post sell and ask you a question or two more. And then I also want to hear your perspective, Daniel and Camilo, on the tax side of it, since this is tax mastery for solopreneurs. But my first question would be, what do you tell solopreneurs about life after selling their business? How do they set themselves up for success beyond the deal?
Passion, purpose, so important. If every business owner tells me, I want to go golfing, I want to travel, and I want to spend more time on the beach. And that's great, but those things get old very, very fast. I knew a business owner that broke his hip within a month of selling his business playing golf. So now he can't play golf anymore.
Ooh, yeah.
So you have to find, what are your passion projects? What is it that you really want to do? And I know from experience, my mom, guidance school counselor, 30 plus years, and she was just waiting to get to that retirement. And all she wanted to do was just not work anymore and just travel and do. But man, I have traveled across the world with my wife, and traveling is rough on the body. You cannot do that when you're over 65, 70 years old. If you're not in decent shape, you're going to Europe, walking on cobblestone roads. It's very difficult. And you're wearing a backpack, dragging a suitcase. Traveling is exhausting. When you come to that age, you can't do it the same way when you were younger. A good example is I have a business owner now who loves to paint. She already had her plan. She wants to start a small art studio where she could paint by herself and potentially start a little art school for kids, teaching them how to do art, maybe have a night class with wine for adults. And I'm good. If I make enough money off the sale of my business, it's not something that needs to be hugely profitable. It's just a passion project. So that's great. That's what I want to see. That's what I want to work on. That's what I want to spark in their mind, the business owner, of like, what is it that you're going to do? Because you're an entrepreneur. If you're not doing anything, one of two things are going to happen. You're either going to get bored or you're going to die, because you lose your purpose, you lose your life ultimately. If she's got this plan with the art studio now, I do take a deep dive as a business owner myself. What's the studio look like? How much do you think it's going to cost? Do you want to buy it? Do you want to rent it? What's all the materials going to cost? How much are you going to charge for classes? Let's start developing a business plan so that after you sell your business and take a 6-month break, you've got this ready to invest in your new business. So passion and purpose are very important for business owners to think about, because most of them are ready to get out and they just want to break free and they don't want to work anymore. And that's the complete opposite mindset that you want to have going into this. You want to make sure that you're ready. As far as taxes are concerned, you guys are better at answering that question than myself, but I know the tax hit is big. The last thing you want is a business owner making $250,000 a year from their business and they end up taking a pay cut because they didn't really do the math correctly on how much money they would have left upon exit.
Yeah, I feel like that was a mic drop moment. That's a really nice thing that you're saying to focus on, because they're an entrepreneur. Like, you're going to want to keep pursuing something and contributing to the world in some way. And so really thinking about that, and I love that that's a part of the conversation you're having with people. Now, the tax hit could be a real wake-up call. Daniel, Camila, what are your thoughts on
I'm
this?
curious, Vince, because of the new tax bill that passed, there's been some really good updates with 1202 stock, also called QSBS, the Qualified Small Business Stock, where a business owner, if they're structured as a corporation, can sell the stock instead of the assets of the company and potentially get that tax free as far as the capital gain is concerned. Do you run across those, or is it easier than it sounds? A buyer may want to buy the assets versus the stock of the business. Does that hinder the deal? Do they need to lower the price because it's a stock purchase versus an asset purchase?
I haven't run into that yet. All
Mhm.
I've done so far is asset sales.
Which is very common.
It's like
Typically,
90%.
it's rare, but it's definitely one of those things that are pretty fascinating. Do you find that the majority of the businesses that sell, are they S corps? Are they C corps? Are they partnerships? What have you seen most common?
It's a mix, but it's typically S corps and LLCs is what we're selling typically.
Camila, do you have any questions? Because I have one more, but this is kind of changing the subject.
Yeah, I came into the meeting thinking that you were very much involved in the sale of the business, but also in getting people's retirement done and other things. From the conversation, it's okay, you're more into the business sale itself. That's your primary role, which I think is good because you're not focused on 20 different things. You're focused
No,
on the valuation of that business and getting that person the most money for what they're selling, all their life's work.
the person behind the business really is what's most important to me. And then everything else on the actual personal side, that's something I would prefer to refer out.
Yeah, awesome.
That's good. We see so many people that are somehow experts in every little thing.
Mm-mm.
Yeah.
No,
Sell you 20 services.
I know business is my thing. That's where I would like to stay focused. I'm just a people person. I really love people, and that's the personal side of it that I just want to make sure that they're taken care of and they're good. As far as the expertise behind those things, I just want to know what's going on. The expertise would be you guys and the more dollars and cents and everything. I like to look at the business though. Ultimately, that's my ultimate goal. Yes, you are correct.
Okay, so last question here, changing subjects. I watched your video about sponsor deals, and I thought it was really fascinating. Instead of just buying a whole business, they buy a part of it, a minority share, inject cash flow, and then help create more value. It just seems like a win-win for the business owner that might be able to get more than if they were to just sell it upright. And it also seems like for private equity, it's a way for them to test the waters. Could you talk about that a little bit as far as what sponsored deals are? It seems like they're coming back.
I love it. It just makes so much sense to me. As a business owner who was always just on an island by myself, it's just a nice opportunity of really being able to. It's funny. I don't know why. The first thing that comes to mind, I tend to speak my mind sometimes. So, first thing that comes to mind is my buddy who owned a bar and he was very into breweries. He used to call it selling out. When the craft brewery would sell out to say a Budweiser or stuff like
Mhm.
that, I would tell all my buddies, why is that selling out? That's like you're being rewarded for what you've been able to build, and you've got people with more experience than you, a lot more money than you, who are saying, dude, what you've built is incredible. I want in. It's a relief for the business owner. The sponsorship deal is a private equity firm, typically a group of investors. They're coming in, they're looking at your business. Typically, this group of investors, I mean, there's a different million different private equity groups, but let's make it simple. Typically, it's a group of entrepreneurs. It's just a group of business people that have been very successful, that have money. They basically put their money together into one account, we'll call it, and they used up money and they're like, okay, what's a good business for us to get into? They inject that capital into the business to help spark whatever it is that company may be lacking, because there's no company out there that exists that's perfect, not from Apple to whatever. There's always something that can be better. They want it to be successful. They don't want it to fail. It's their money. So they're going to input their expertise and everything that they know. So let's use a brewery, for example. Now that I started that down that road, you have a private equity firm that specializes in turning around breweries, and they come in and they see your brewery is a killer brewery that has exponential potential. They invest cash flow. By sponsoring it means that they don't have to take necessarily 100% and kick you out. They can take 25%. They can take 49%. They can take 51%. And what that happens with you is that process is you put a valuation on the business, you sell, typically you sell 100% of the business, and then you invest the 49% or the 75% or the 25% that they're coming in, you invest that back into the business. But typically it is 100%. Let's say it's 10 million bucks and they're taking over 50%. You sell it for 10 million, you invest back in 5 million, but you just made $5 million. Now you're in it at 50-50. They're going to inject capital, their $5 million. They're going to inject all of their experience. And now in 5 years, that company's worth 20 million. You sell it again for 20 million and you're at 50%. Now you just made 10 million. You just sold it once for 5 million. You just sold it again for 10 million. And maybe you stay on now with just maybe 25%. 5 years down the road, now that business is worth 50 million. Now you just made 25 million off the next sale. That's what's called 1, 2, 3 bites of the apple that I literally I learned in a book just over a year ago. It's a great book. I can't remember the name of the author. I'm trying to have him on my show. But that's what he did. He had 3 or 4 bites of the apple and started not knowing anything about M&A, not knowing anything about private equity, and ultimately he became like a freaking expert at it. And I just think it's a concept that can really, honestly, you're sitting pretty, man. You retire and you're old. That's wealth right there.
Right. And I think it's a really cool concept and strategy. If somebody is having mixed feelings, they know they want to sell, but they have some letting go issues. It's their baby. Maybe that's a good way for them to start. If they do find a year from then that it isn't a good relationship, what's the departing process there? Do they just buy out the business owner and say, just leave, we got it over with? Does that ever happen, or do you think there's enough due diligence prior to where the likelihood is low?
I think the likelihood is low, but I don't know. It's always possible. If things don't work out, that's depending on how you put it together. Contract, every deal is unique. They've all got their different things. So there's got to be some kind of clause that can get you out or get them out or you buy them out. Typically though, yes, you would have to buy them out. Anybody who's got a percentage of your company, if you want them out, you have to buy them out.
But it's a good way to, instead of selling the whole thing, getting a piece of it and still making some good money.
I tell business owners, like, the funniest thing is always my initial conversation with the business owner. Every business owner thinks that selling their business is like selling it and they're never going to see their business again. It's like, no, there's options. You could sell it to private equity, do a minor recapitalization, majority recapitalization, sell it to your family. You could sell it to your employees. You could sell it to your management team. They don't understand that there's options. You don't have to necessarily just sell it and walk away. There are options that you could have, and there's a process behind it. If you don't feel comfortable with the first private equity firm or the first buyer, you don't have to sell it to that person. That's why there's an interview process. There's a due diligence process. There's like you have to do your due diligence on the buyers as well to make sure that they're ready to go. Like, I want to know about this private equity firm. I want to know who the investors are, their experiences. I want to know how much money they're putting in. I want to know the other businesses that they have as well. If I'm going to go and did you know that only 20% of the businesses sold on Shark Tank actually complete the transaction?
No, I had no idea.
It's like a super low number. It's like 25%. And I learned this from Damon.
We all know him as Damon.
I think it's like 20 or 25% because after the show is over, the due diligence begins. And it may not be a good relationship. It may not work out, but at least you learn from the experience. And if that's something that you want to do, then you go and you keep looking. But ultimately, I tell my sellers, if this is an option that you like, don't be afraid of it either. We're going to go through an interview process and make sure that it works out. When we get legal involved and the contracts together, we're going to make sure that, it works on both sides and everyone's happy. I think it's awesome.
Amazing.
Awesome.
Vince, you're a wealth of knowledge. We appreciate you coming on today. For solopreneurs looking to exit their business, to scale it and sell it eventually, where can they find more about you and about how to successfully sell their business?
Yeah, we're doing a soft launch of our community next month. It's going to be a community just for entrepreneurs, for business owners that will be available for free for now, just so I could really get it going. We'll be promoting that on the YouTube channel, which is Vince Perri Official. Vince Perri Official on Instagram, Vince Perri on Facebook. I'm pretty easy to find if you just type in my name. I'm pretty excited about the community because that's going to have some courses that people could look at on how to get their business exit ready from the beginning. And then there'll also be weekly group calls, and experts like you guys will be there to answer questions, maybe come on a call every once in a while and just provide different information for business owners really looking to build with the exit in mind. I think we have 3 generations of people, right? We have the baby boomers, we have Gen X, and we have Gen Z. No, I get them all confused. But then we
The
have
millennials
anyway.
work their way in there somewhere.
I'm looking at my market, I think typically is probably going to be anywhere from like 35 to 60. Baby boomers are done. They're married to their business. They don't know whether they want to sell. They don't know what they want to do. The next generation is up to 60 years old. They're ready to retire. But it's the generation before that, the millennials, where I'm a millennial, am interested in different things. I don't like to necessarily be tied down to one thing. So what I think we're going to be seeing from the millennial generation and the next generation is people going into business with the intent of being in it short term to ultimately flip it to someone else, just to build something nice, sell it, make money, and go build something else. I do think that's what's coming. I know everybody talks about the silver tsunami and all of that. I think that's there too, obviously, because they're ready to go. But I do think what we're going to see with the millennials in particular and the next generation after that is really people looking at business more like that product that they could ultimately build up and then sell and then start something else. So I'm excited about that.
Yeah,
Amazing.
absolutely.
Well, once again, thank you so much for being on, and thank you everyone for listening to Tax Mastery for Solopreneurs today. This was Vince Perri, and we'll see you in the next episode.